Hello, this is Cody Smart with Wilmore Capital Lending, back again with the Home Buyer's Guide book series. And on this video, we're going to be talking about how to prepare to finance a home. So here's some general topics. One is develop a budget. Use receipts in your banking transaction history to create a budget that reflects your actual habits over the last several months. This approach will better factor in unexpected expenses alongside more predictable costs such as utility bills and groceries. Lenders generally look for a debt load of no more than 36% of income. This figure includes your mortgage, which typically ranges between 25 and 28% of your net household income. So you might need to get monthly payments on the rest of your installment debt, car loans, student loans, and revolving balances on credit cards down between 8 and 10% of your net monthly income. Just to let you know, Wilmore is able to go up even to 50% debt to income in cases. Doesn't mean you want to max that out. One way is to increase your income. Now's the time to ask for a raise. If that's not an option, you may want to consider taking on a second job to get your income at a level high enough to qualify for the home you want. This actually is a very nuanced tip here. A lot of times with the second job, you have to have it for 2 years or a second job for 2 years. So, talk to a mortgage professional, Wilmore Capital, before going off and doing that necessarily. Save for a down payment. Designate a certain amount of money to put away in your savings account each month. Although it's possible to get a mortgage with less than 5% down, you can usually get a better rate if you put down more. Aim for 20% of the purchase price to avoid mortgage insurance unless you're on a specialized loan. Keep your job. Easy to say, and good advice in general. But while you don't need to be in the same job forever to qualify for a home loan, having a job for less than 2 years may mean you have to pay a higher interest rate. So this is just kind of a qualification issue. When we're looking at qualifying you, really we're looking at 2 years history, so 2 years of W-2s, 2 years tax returns depending on the loan and your income type. Establish good credit history. Get a credit card and make all your bill payments on time. Pay off entire balances as promptly as possible. Also, obtain a copy of your credit report, which includes a history of your credit, bad debts, and late payments. Ensure that it's accurate and correct any errors immediately. Keep saving. Even if you have enough money to qualify for a mortgage and cover your down payment, you will also need to factor in closing costs, which can average between 5 and 7% of the home price, and incidents such as the cost of having a home inspector. Don't spend your last money on a home. That's just the general advice there. Decide on what kind of mortgage you can afford. Generally, you want to look for homes valued between 2 and 3 times your gross income, but a financing professional, such as Wilmore, can help you determine the size of your loan which will qualify. Find out what kind of mortgage, say a 30 or 15-year loan, fixed or adjustable rate. I suggest fixed is best for you. Also gather the documentation a lender will need to pre-approve you for a loan. Again, this is things like W-2s, pay stubs, bank accounts, and those general IDs, for example. Don't forget property taxes, insurance, maintenance, utilities, and association fees if applicable. So again, this is Cody with Wilmore Capital Lending. Happy to keep giving you tips through this Home Buyer's Guidebook series. Please go to our website, wilmorecap.com, follow us on our socials. Be in touch soon. Thanks a lot.